Hello everyone, welcome back to Chill Deal Trades, where I analyze the market so you know what's going on. Today we're going to be doing another market update video, kind of covering the news that has come out recently because it's really important to understand what's happening at a macroeconomic level, as well as jumping into the SPY, which is the S&P 500, and the NASDAQ, the QQQs, to figure out where the market could be headed. Because if the SPY and QQQs go down, the stocks you hold will go down as well. This is really important. That correlation is important. That's why we do these videos. A lot of you guys, you subscribers, new people, you need to watch these videos on my channel because they're so important. We've called 2 of the pullbacks so far. The first video, we said if it didn't break above X level, that do not buy stocks yet. And you could short the market, which I mentioned in the video. I personally made a few $100 on the shorts. And then the second one, we made a video a couple days later. I said, if it doesn't break above this level, short the market or don't buy stocks yet. Guess what happened? Another down. And so you could have made lots of money on 2 downturns if you watch these videos. So if you're subscribed, watch the videos. If you're not subscribed, subscribe so you know when the videos come out because they're super important, and we're going to do another one today. So first, let's jump into the news recently. So there's been a lot of this news about debt ceiling and inflation and stuff. So we've talked about it quite a bit in the past videos last week. So go back and watch those because those are really important information to know about stagflation, how inflation works, things like that. But the main thing that's a lot of news, this has been going on for a long time, of basically shippers being stuck out on ports across the world. And now we're seeing a big stockpile happening on Southern California. So there's tens of thousands of shipping containers stuck on the coast. And this is really, really important because of what they hold. They hold equipment, they hold goods for businesses, and what that does is that slows down growth. And when growth slows down, the stocks you hold are impacted. If you hold any company that needs equipment, sells goods to consumers, anything like that, then your stocks are going to be impacted. And this is really important because Q3 earnings are coming up. And I mentioned in the last video, but we had a GDP downgrade. And so Q3 is going to be really tough for a lot of businesses. So don't go out there and buy in every stock. Because last quarter, I think 78 or 87% of S&P businesses beat earnings. That's not going to be the same with Q3. So be careful. On top of all these shortages happening, we also got news that China is having significant basically energy issues, and they're having to shut down factories. And this is another thing that's really important to understand because, again, this is going to slow down growth, both in the U.S. because we get so many things from Asia and China specifically, as well as China. We talk about China stocks quite a bit. So if you hold China stocks related to these parts of the industries of factories that make goods, be careful holding those stocks. We talk about on the channel, we're Alibaba holders. We bought some recently, not a financial advisor, but we bought some recently. But this is important to know because this will impact the U.S. and it's going to continue to make that supply chain issues even worse. And when those supply chain issues gets worse, that means inflation goes higher. And then goes on to the next topic, is covering Jerome Powell spoke today, and basically said he's a joke at this point. Because for everybody's inflation is transitory. And now he's finally saying inflation is frustrating and you see it running into next year. He's going to say, oh, it's going to run about the same. But as we know, that anything that he says is not true. He's trying to calm down the markets. So he's saying he's expecting it to run through 2022, and he's seeing it as a frustration. And the reason it's frustrating is because with inflation going up, prices go up, good prices go up. These put more and more impacts both on businesses, on their profit margins, as well as consumers, because consumers, us, are paying more money for goods, so we have less purchasing power. And what that does is that slows down growth. So when you have growth slowing but you have prices going up, that's a very, very bad situation for the economy, and that's very bad for stocks, because what's going to happen is either the Fed's going to have to taper very quickly, quicker than they wanted to. They said we're not going to end tapering till mid-2022. But if inflation keeps going up, then they're going to have to taper quicker and faster. And if they taper really fast and pull that liquidity out of the market, your stocks are going to go down. The second thing they might have to do, and they talked about today, Jerome Powell did, is raising interest rates sooner than expected. A while ago they said we're not doing it until end of 2023, then they said the beginning of 2023, and now they're saying the end of 2022. If we see inflation continue to be an issue, if we see the CPI and the PPI numbers continue to go up, interest rates will go up sooner than they expected. And so we need to pay attention to these, because if they taper quickly and basically pull back purchases really quickly, stocks will go down. If they raise interest rates, all these companies at really high valuations, those valuations are going to come down. So when we see stocks at 50, 60, 70, 100 PE ratios, if interest rates go up and debt is more expensive to borrow on, those valuations have to come down significantly, and that could cause a very significant correction, if not a crash in the market. So that's why these things are really important to pay attention to. And the last thing we want to talk about is just the debt ceiling. So we mentioned it before, but you know, Yellen, she's a little bearish all the time, but she's like, we really need to raise the debt ceiling. And if you know how that works, it's basically the U.S. has debt. They have to pay that debt on a consistent basis. And if we don't raise the debt ceiling, because we're at it right now, then they can't pay debt and we default. The chances of this happening are very, very small. It's probably like 10% chance that this is actually going to happen. But if it does happen, and this is what's really causing a lot of fear in the market. All these things are causing a lot of fear, and we'll go through the technicals in a second. But these are important. That's what's causing the market not to move back up, is we're getting continuously bad news. It's not FUD. This is real life things that are happening in the market, and we have to pay attention. But we did see that the House, they did pass the bill that was to suspend the debt ceiling. Key thing there, suspend, not increase. There's a big difference there. But then they said Republicans in the Senate said they will not support the debt limit increase or suspension. So we'll have to see what happens in the next, I think we have a month now, a little less than a month, 3 weeks to figure this out. And so we really want to pay really close attention to this, because if they do default, what happens is stocks will crash. And the worst case scenario is that U.S. bonds get downgraded. So U.S. bonds are graded at the highest level they could be. If we start defaulting on debt, then we're going to be downgraded as a country, which is going to have even more downward pressure on stocks. So not to scare you guys, but these are things you need to know that's happening. We talk about it. Me and my buddy have a podcast. It's in the description. We do every Saturday night on Twitch. We talk about these macro things, and they're very important to understand. Let's go ahead and go to the charts, because that's probably why most of you guys are here. So let's go to the SPY first. So the main thing to call out is we're right here at the 100-day. We're at the 100-day AMA. So we came down here before, and we broke back above off that big wick. So right now we're in a downward pattern. See this? Now we're going to have to see what happens here. So we're either coiling up into the end of this triangle, or if we get more downward pressure and break below this level, then we're starting a lower low and lower high pattern. And that's what we're going to have to pay attention to. But for now, we're going into this. Part of the reason I think that it's probably a little more unlikely, unless we get really bad news, that we're going to break below this 428, is just the indicators. So right here, RSI is at 39, pretty low, not oversold, but pretty low already. And when we look at MACD is already negative. And so we're going to have to see what happens here. I can definitely see MACD coming up back to 0 and making a decision there. If it goes back up to 0 and gets rejected, then we're probably going to the edge of this triangle. We'll break to the downside. But if MACD can come up here and break back above 0 and hold above 0, then I could see us breaking above this trend line, and we could go up higher to test some of these past ranges we've talked in past videos. So that's really the main big picture things, big trends that are happening for the SPY. If we do go lower, we obviously have very big support here. So based off the COVID lows, we have this new trend line. They love to make new trend lines off of this wick here. So we're kind of close to testing it. If we break below that, look for a double bottom here as a potential, and that's at 428. If we do break lower, big picture wise, something I didn't mention, I said this in the last video as well, is we had to break above 50 on the RSI. We didn't. Guys, the stuff I'm telling you is not BS. I said if we do not break above 50, we are. So right now we are in a bearish cycle. We're in a bear cycle right now. We have to get above 50 to get out of that bear cycle. So far, we have one breakout, or we have one failed breakout. Now we have 2 failed breakouts. We're typically in a bearish phase right now, and until RSI gets above 50, we are out of a bear phase. We've been here long enough to say this is a bear phase. So we'll have to see what comes next. But there is a lot of negative sentiment kind of pushing this and holding it down here. As you kind of told today, like it tried to break out many times, sold off, break, sold off. And we're kind of in this sideways pattern right here. And this is going to be really important to watch, because look what happened here. We are kind of stuck in this sideways pattern right now. And so if we break to the upside, we really want to watch for this gap fill up to 442-ish range. That's going to be a very important area to keep an eye on. When we go back to the daily, what's important there is even if we fill the gap, we still haven't broke above this range. The stock market's probably not going to test new highs unless we can get above 444. Before it was getting above 446, but now it has to get above 444. So that's what we're going to want to be in the lookout if we do see buying pressure to the upside, maybe on debt ceiling news and things like that. But those are some levels we want to look there. If we do break below this double bottom here, you know, next support levels 442. As we can see here, a lot of support are right here. Let's go to the 200-day just to get an idea of where the 200-day is. So 200-day is still way lower. Let's go to 150. Did I just get rid of that? Let me get that back. But if you guys are here, please like, please sub. I really want to know what you guys think. I'd love to hear your guys' thoughts. Okay, we go to the 150-day, which is sometimes a big long-term indicator. That's at this next support, which is at 222, the number we just pressed out. So this 222, I would say, is going to be the most significant point if we do pull back, because that's somewhat line in the sand, because I believe the 200-day is quite a bit away from that. Yeah, the 200-day is not till 212. So, guys, really important, I would say, over the next week. Pretty important timeline to see where the market wants to head. Let's go to QQQs. Okay, so for the Qs, we're in a slightly different situation because we haven't quite tested the 100-day yet. So the Qs have been much stronger in the market as of recent, but we're seeing a different pattern here. So on the SPY, when we said it's kind of heading into this sideways triangle, here we're actually already have formed a lower high pattern. So we're at a lower low right now, and we'll have to see if we can bounce off that 100-day and see where it comes. If it comes back to this trend line here and doesn't break above 337, even if we fill the gap at 370, if we don't break above 373, then we're still in that lower high and lower low pattern. So that's what we really want to keep an eye on there. Very similar to SPY, MACD is negative, and it's pretty actually accelerating down to the downside much more than the SPY is. So that's something we want to keep an eye on if we start to round out here. Very similarly, see if we can come up and test 0 and see what happens. RSI is a little bit lower, but we're seeing great health on the RSI. Sometimes we'll see divergence happening, and on this move lower, we're not seeing any divergence yet. We see RSI higher at this point, and we're seeing it now that the price is lower. We're seeing RSI lower, so that's healthy to the downside. If we saw divergence, that could be potential reversal, but we're actually seeing health there. So I could definitely see this 100-day at 356 as a potential point. If we do break below that, we have a pretty important range right here, and this is between 354 and 353. That's going to be a pretty important range. Just for the heck of it, let's see where the 150-day is. Okay, a bit lower there. That's going to be a really important range to hold. At some point, we're going to have to see another bounce to the upside. And the main reason I say that is the 20 EMA. I really want to bring up the 20 EMA, not the MA. The 20 EMA, I believe, is around here somewhere, and it's accelerating to the downwards pretty significantly. So we're going to need to see a bounce back to the 20-day. But as the 20-day is getting lower than this price point, it is setting up lower lows and lower highs. So a little bit less bullishness there. Like I said, we have to break above 373 at this point to see any bullishness to the upside, because we are in that pattern. But that's just a couple of price points for you guys to take a look at. Thanks for stopping by, and I hope to see you again soon. Appreciate it so much.